So Airbnb just dropped some massive profit numbers, right? But a new report from BGVC is saying, hold on a second, the real challenges are just getting started. Today, we're going to break down why Airbnb is standing at this huge crossroads. All right, so the core idea here is that Airbnb is going through this massive shift. They're basically throwing out that old Silicon Valley playbook, the one that screams growth at all costs, and they're turning into a mature, powerful cash generating machine. And what that really means is the hypergrowth startup we all knew, well, it's pretty much gone. What we're seeing now is a much more disciplined company, a real powerhouse. But here's the catch. With that maturity comes not just incredible financial strength, but also some brand new weaknesses. So you hear this term paradigm shift, but what does it actually mean for Airbnb? Well, it's a huge strategic pivot. They're not just chasing after more and more users anymore. Instead, they are absolutely laser-focused on efficiency, on generating strong, reliable cash. It's kind of like they're shifting from this all-out, high-flying offense to a really powerful, disciplined defense. And believe me, that defensive strength is just staggering. Let's dig into the first side of this coin, which is the company's incredible financial muscle. And man, was it on full display this quarter. Get this. In just Q3 2025, Airbnb pulled in a whopping $4.1 billion in revenue. That didn't just meet expectations, it blew past them. It's proof that their core business is absolutely rock solid. But what's even more impressive, if you can believe it, is their profit margin. Their adjusted EBITDA margin hit a record 50%. Now, to put that into perspective for you, a 50% margin it's just almost unheard of in the super competitive travel industry. That's the kind of number you expect to see from a top-tier software company, not a travel platform. And all that profitability, it turns directly into cold, hard cash. We're talking $1.3 billion in free cash flow in just this one quarter. I mean, that's the fuel for everything they want to do. Stock buybacks, new innovations, you name it. Okay, but here's where it gets really interesting. The context. That 50% number isn't just good, it's the best in the business. They're comfortably ahead of their main rival, Booking.com, and they're more than doubling Expedia's margin. This incredible efficiency, that's Airbnb's superpower right now. But, every coin has two sides. While the company is an absolute profit machine, we have to look at the other side. There are some serious challenges starting to pop up, and they could really threaten where the company is headed. So even though profits are at an all-time high, the road ahead looks a lot tougher. Their growth is starting to slow down, the competition is getting fierce, and there's this global regulatory storm just brewing on the horizon. And the single biggest threat here is regulation. What's happening in New York City with their new law, it's a potential game changer. We're not just talking about new restrictions. This law effectively bans the most common type of short-term rentals. And the real danger? Other cities are watching this happen, and they're starting to copy the exact same playbook. And the impact? It's just staggering. A 92% collapse in short-term listings in New York City. That's one of their most important markets, completely decimated. It just goes to show you how devastating these new rules can be. At the same time, the competition is definitely not just sitting around. Booking.com is actually growing faster than Airbnb right now. They're pushing hard into Asia and going all in on this connected trip idea, where they bundle flights, cars, everything. It's a totally different strategy, and it's forcing Airbnb to play defense on its home turf. So you've got slowing growth on one side and all these threats piling up on the other. The big question is, how is Airbnb fighting back? Well, it turns out they're launching a counterattack on multiple fronts. Okay, a huge part of their strategy comes down to AI, and they're tackling it from two different angles. First, they're using AI to slash their operating costs, mostly by automating a ton of their customer service. And second, they're building this really smart, generative AI search tool to give you way more personalized results. The hope, of course, is that this will lead to more bookings. And it's not just about AI. They're also rolling out some really practical new features to get things growing again. For example, Reserve Now, Pay Later makes it easier for people to commit to a booking. Then there's this new co-host network, which is all about finding and adding more high-quality places to stay. You combine that with a big push into international markets, and you can see the strategy. find growth anywhere and everywhere they can. So, when you weigh those incredible profits against these really serious risks, what's the final verdict from this BGVC report? Where does the smart money think the stock is actually going? Well, after running all the numbers through different models, the report lands on a fair price of about $135 a share. Now, that suggests there's a little bit of room to go up, but it's no massive bargain. That's why they're giving it a neutral rating. The message is pretty simple, really. It's a fantastic company, but it's not a cheap stock. So the big takeaway here is pretty clear. Airbnb is an excellent, super profitable company, a really high-quality asset. But, and this is a big but, its current stock price already has all of that good news baked in. That leaves very little room for error if those headwinds we talked about start to blow any stronger. And that really leaves us with the final big question. Is Airbnb makes this tricky transition from a high-growth disruptor into a mature profit powerhouse? Is it a safe harbor for your money in a choppy market? Or is the real opportunity, the real bargain, still somewhere out on the horizon?